From an education standpoint, what's the greatest need with respect to closed-end funds? What stands out as an area where more knowledge would be helpful to advisors and investors?
The beginning closed-end fund investor might already be aware of some of the structural differences that distinguish closed-end funds from their open-end fund peers. But what they might not yet be aware of is how those structural differences can actually inform the underlying constituents of the closed-end fund portfolio in ways that it would not inform the open-end portfolio. For example, in the municipal closed-end fund universe, we typically see muni closed-end funds have longer durations than their open-end peers. And the reason behind this has to do with the fact that open-end funds are subject to liquidity requirements that closed-end funds are not. When you own shares of an open-end fund, you redeem your shares with the fund itself. If you own shares of a closed-end fund, however, you are trading with other closed-end fund shareholders. So the managers of closed-end funds can do things with their portfolios that the open-end fund managers cannot. We typically see the municipal closed-end fund manager has the ability to invest in higher yielding, longer maturity bonds than the average open-end fund municipal portfolio manager. We also see more leverage used in the closed-end fund universe than we do in the open-end universe. And the combination of ownership in higher yielding, longer maturity bonds and leverage on the closed-end side typically increases the duration of the average closed-end fund more so than that of the open-end fund. And that longer duration means that these funds are going to be more sensitive when interest rates change than funds with shorter durations. So for advisors who are concerned about the rising rate environment, be prepared to expect possible losses among municipal closed-end funds when we have rising rates.